Profit only on NDTV Profit, and I'm your host Malika Mishra.
And I'm your host Himakshi Bahugna, and together we'll be taking up all your stock related queries. So don't forget to call us or WhatsApp us. Both the numbers are flashing on your screens right now, viewers. And on the show we are joined by Avinash Gorakshakar on the fundamentals and Sundar Kevat on the technicals. Welcome to the show, gentlemen.
Yeah, good evening.
Good evening. Now let's get straight to the first query on our show. Raghu has written to us from Bengaluru saying that he's bought 400 shares of PCBL at 391 a piece, but he hasn't mentioned the time horizon, so I'd like to take both the fundamental and technical view on the counter. Currently it's trading at 424 and Raghu is sitting on a profit of over 13,000. So Avinash, coming to you on the fundamental side, what's your outlook on PCBL?
Yeah, I think, first of all, PCBL, which was earlier known as Philips Carbon Black, is one of the largest player of carbon black in India, which is a very important raw material for the tire sector. It recently acquired a water treatment company, and that has also started generating profits both at the EBITDA and at the net level. See, I think one good positive about PCBL is that despite the fact that the December quarter was a slightly weak quarter because of a kind of large expansion the company did, the current scenario presents a very good, promising opportunity for a company like PCBL because crude oil prices have dipped by almost 1%, and any further dip in the crude oil price, is definitely going to be incrementally positive for the company because a large part of its raw material is derived from petroleum derivatives. So we believe that, maybe not the March quarter, but the April to June quarter could definitely be better if crude prices remain the way they are. And hopefully, once there is some recovery in the domestic market, especially in the automotive sector, especially for players operating in the domestic market, the tire sector will witness a healthy growth in FY26. So I think, the investor can hold on. He's already in the money. He's making a decent amount of money, profits at the current level. But if he can hold on for the next, say, 12 to 15 months, I think it's a decent stock to hold on, where I think the tailwinds look to be positive. And if at all the crude prices further correct, that would add further to the margins and the profitability of the company.
Avinash, that's a positive outlook on the counter for long term. And Sundar Kevat, I'm talking about the technical front. Currently it's trading at 424. So are these the correct levels to enter for a new entrant?
Yeah, so if I look the chart over so the chart is currently positive as of now, and one can enter the stock at 224. The reason for this is because there was an important resistance at 420, which the stock has been taken out, and comparatively, if I see the volumes also, the volume is also at the positive side. So I would recommend if anybody wants to add, then yes, they can add. And additionally, one positive thing about this stock is that the stock is trading above its short-term, mid-term, and long-term moving averages. So I would like this stock to be, breaking out from this level till 500 odd level. So and also if the viewer wants to place a stop loss, then yes, they can place a stop loss below 400 levels.
Right. Thanks for that view, Sundar. Now let's go across to another WhatsApp query. So Abhishek has written to us from Kolkata saying that he's bought 108 units of BLSE at 135 a piece, and so whether he should hold or sell the counter. Again, he hasn't mentioned the time horizon, so I'd like to take both the fundamental and technical view on it. Mr. Avinash, coming to you, currently it's trading at 145. He bought it at 135. But the stock was down in trade today over 6%. And BLSE Services actually provides digital services, including e-governance, business correspondent, and allied services. So this space in particular, are you optimistic? And what's your outlook on this counter?
First of all, BLS E-Services is a subsidiary of BLS International. As everyone is aware, BLS International still controls the majority share, and it's a subsidiary of this company. BLS International is the parent and has a very large, dominance in the visa market. In fact, they are one of the key dominant players which operates in almost 65 odd countries. So the parental support for this country is very strong. And most importantly, the e-support business, which is growing rapidly, government is announcing a lot of these e-support services to private sector vendors like BLS e-services. The numbers also for the quarter December have also been quite encouraging. The company management also has sounded very positive in their outlook. So my sense is that, if the investor can hold on for at least a year, because today almost every stock has been beaten down. It's not only BLS e-service. but the entire market has been beaten down, the broader market. So I think, it's better to hold on. There's good value in the business provided the investor can give in at least 8 to 12 months. And I think you could definitely expect a decent risk reward going forward.
All right. All right. Thanks for that view, Mr. Avinash. And Sundar, coming to you on the technical front, how are the charts faring for BLS?
See, if I refer the daily time frame, the chart is not positive at all. I mean, if I see the stock is continuously breaking its important support. Previously, the support was at 160, but then the support was taken out, and currently the support level is at 145. And looking at the selling pressure, I could say that the stock could experience more selling pressure, and also the volumes have also increased. This is not a good sign for the stock as of now. And RSI is currently at 30 at the daily RSI. So this is indicating that this has more potential to go down. So as of now, I wouldn't say that you should go long on this counter.
Okay, and viewers, just a gentle reminder to all of you that you can very well call us and give us your queries so that we can give you the best investment advice. So do call in on the numbers flashing on your screen. You can also write to us on WhatsApp, but we're here to talk to you live, so do call in. Let's take up another WhatsApp query. Arvind has written to us from Chennai. He holds 100 shares of Mamata Machinery at 460 rupees a piece. The stock is now trading around 351, close to 110 rupees down from his buying price. The stock did see a dip of close to 4% in trade today, and he's asking whether this is the right time to buy more shares of Mamata Machinery or not. Avinash, I'd like to take this question to you. What's your view on this particular stock?
No, I think, Mahima, I think, this stock is a capital goods manufacturer, and I think a recent IPO of this company was made. What is interesting is that, they have an order book which is going to be, consumed over the next, say, 12 to 18 months. And a lot of marquee investors have already invested in this company. In fact, investors like Madhu Kela have invested in this company. He's very positive on the company. Most importantly, the stock has come down obviously because market sentiment has been bad. The fundamentals of the company remain pretty strong, and if the investor is of the opinion that he can take an exposure for the next 12 to 15 months, I think definitely this company should do well because they have already an existing order book, and that means there's good amount of revenue visibility. At 350, if he's willing to take a 12 to 15 month call, I think he should add more. My sense is that the recovery will be slow, but it's a strong business, and the company's positioning in the market is also very solid. So we are positive and constructive on the stock.
Okay. And Avinash, very quickly, my name is Malika. My colleague's name is Mahima, who anchors the show in the morning. So just a correction over there. If you could call me Malika, I'd be really happy. Sundar, I'd like to take your view as well, because Avinash had a very optimistic viewpoint on this stock, and he said that it has had a healthy performance, and there are significant investors invested in this company as well. Do you also reckon the fact that it is currently trading at a discounted price, and therefore Arvind should buy more units? And if you could also give us a good support level for this particular stock.
Yeah, so if I refer the daily time frame, the stock is currently, into a range bound kind of scenario. The range is from 410 to 315. This is a quite broad range as of now, and the stock is at its important support. So the important support is currently at 350 to 345 ka zone, and if the stocks breaks out above 375, then yes, the stocks looks positive on the chart as well. And one interesting point about this stock is the short-term moving averages are showing some positiveness in the chart. So I would recommend, if anybody wants to add the stock, then yes, they could add about 375. And for me, the first target will be at 410. Then the second target will be at around 450. And if anybody wants to place stop loss, then yes, the stop loss should be placed below 335 on daily close basis.
All right, thanks Sundar for that view. Now Shrikant is joining us on the phone line from Hyderabad. Hi Shrikant, good evening.
Hello?
Yes, how can we help you on the show today, Shrikant?
Madam, my two sets of stocks were recommendations, madam. Packaging and OCC hospital sector stocks, madam. Which are the small cap stocks recommendations, madam?
Okay, you need stock recommendations for mid cap and
hospitals, madam. Long term.
Long term. All right. So mid cap and small cap stock recommendations in the hospitality space. Am I correct, Shrikant?
Yes, ma'am.
Okay, okay. So, Mr. Avinash, he's looking for some stock recommendations there in the hospitality space. So, do you have any top picks there?
No, I think the hospitality space continues to do very well. I think, if he wants a stock which is decently priced, he could look at the parent company BLS International, which operates in the visa market. Our fair value is about 460 to 470 here. I don't know what's the current price today, but I think looking at the market sentiment, this company can definitely be acquired. It's a good mid-cap stock in the hospitality space. And I think another company which may look interesting, if the investor has a decent amount of investable funds, he could look at Sami Hotels. This is also one of those boutique hotels which is growing rapidly. So here also, I would say that, he could look at a target price of around 200 plus if he can hold on for the next 6 to 12 months.
All right, thanks for that view there. And Sundar, do you have any top picks there in on the technical front?
Yeah, I do have one pick over here. The stock name is Yatharth Hospital. I mean, if I see the daily time frame, the stock has picked up a good momentum from 400 level, and currently the stock is trading at around 550 odd levels. So, and importantly, one point to be highlighted over here is that the stock has broken its important resistance from where the stock previously corrected. So, this is a good stock as of now in charts. Plus, the volumes are also positive, and the mid-term and the short-term moving average these are positive. So, I would like to give a buy above 470 for a target of 550. And if the viewer wants to play the stop loss, then yes, the stop loss should be placed at below 410 levels on daily close basis.
All right. Thanks for that view, Sundar. Now let's go across to a caller joining us from Kerala. Hi, Kanan. Good evening.
Yeah, hi, good evening.
Yes, how can we help you on the show today?
Yeah, my query is regarding KPIT Tech.
Okay.
So I hold 83 shares at an average price of 1,340.
Understood.
I'm okay to hold it for more than 2 years.
Okay.
I'm looking to know if it is good to average in this current level, or if there is more downside, what would be the correct level to average?
All right, all right. Sundar, on this query, I'd like to come to you because he's looking to average out probably at these levels. So what are the correct levels that you can spot on the charts?
See, as of now, KPIT Technology has broken its critical support. Previously, the support was at 12, 10, and the support has been taken out. Plus, volume is also increased with falling prices. So, I would not recommend at this price. But yes, if the stocks looks to me catchy at 950 levels, but not at this price. So, if the viewer wants to add, then yes, at 950 levels, I'm very comfortable to add because that is what the important support level is.
Okay, so 950 is the level, is what Sundar is suggesting, Kanan. Now let's go across to another caller joining us from Navi Mumbai. Hi, Ratish. Good evening.
Yeah, good evening to you, ma'am.
Yes, how can we help you on the show today?
I have a query related to Reliance Industry Limited shares. I have 500 of them at an average price of 1,179.
Right.
I had been holding on these for last 2 years.
Okay.
I can stay put for another 1.5, 2 years. But where do you see the prices going in another 2 years from now?
Okay. So, Avinash, coming to you, since we can't predict the numbers that the stock might reach in the near future, but still, what's your outlook on RIL? What levels do you see, it's somewhere, reaching so that he can make more profits?
No, I think as far as Reliance is concerned, I think, it seems to have bottomed out. And I think one thing which is very important for an investor of Reliance to know is that there's going to be a lot of value unlocking, from businesses like the retail business and the telecom business. So hopefully in the next 2 years, the retail business and the telecom business would get separately monetized. We have already seen one of their financial subsidiaries, Geo Finance, getting listed separately. So, my answer to the investor would be that if you can hold on for the next 2 years, the core business is also getting better. If crude prices soften, that is going to improve the GRMs for Reliance. And most importantly, I think the kind of opportunity we are seeing in the 5G telecom business and plus the retail business, both these businesses are profitable. They hold a dominant share in the market. So I think, it's a matter of time. Reliance normally makes a move very silently but very slowly. So I think, investors normally get frustrated because of this. But my sense is, looking at their balance sheet size and their dominance in these two businesses, and plus, once the March numbers are out, there are expectations that in this AGM itself, some sort of planning could be done to unlock the value for the retail business. So I would suggest the investor should hold on. Don't make a hurry, because these are not prices for an investor to sell out in Reliance. It's bottomed out, and I think that when the uptrend starts, the benefit would obviously come to the investor.
Okay, thank you so much for that view. And now we have another query. In fact, Mr. Sharma is calling us from Mumbai itself. Hi, Mr. Sharma. Good evening.
Good evening. Tell me, madam.
Yes, please go ahead with your question.
Regarding, I have purchased 300 shares of Natco
Okay.
at rupees 1200 rupees per share.
Okay.
Around 2.5-3 months back. Whether can I average the shares, because now it is selling below 800,
Right.
or shall I hold it for 2-3 years? I don't mind holding it if it is going to be good. This is what I would like to know. Or shall I book loss?
Or should you book loss? Okay. And for how many months you said you've been holding on to the shares of Natco Pharma?
I am holding it for the last 2.5-3 months.
2.5-3 months. Okay, got
Yeah.
it. Got it. I'd like to take this view again, this question to you, Avinash. So, Mr. Sharma currently holds 300 shares of Natco Pharma at 1,200 rupees a piece, and the stock was down 4% in trade today. In fact, all pharmaceutical counters were in pain after Donald Trump came out. And said that he is going to impose tariffs on pharmaceuticals as well. And we're living at a time of extreme global uncertainty, where Trump comes and announces tariffs one day on this sector and another day on another sector. And as a result, if we can quickly pull up Nifty Pharma and see how it performed, because the amount of pain over there seen in trade today was quite significant. As you saw, Lotus Lab, Granules, Ipca Lab, Auto Pharma, Lupin, Gland Pharma, Cipla, Biocon, Zydus, everything, every counter constituent of IT pharmas were in the red. Natco Pharma also dropped. In such a space at such a time, would you recommend any viewer, not only Mr. Sharma, but any viewer, to invest in a pharmaceutical company?
No, I think clearly, in the given scenario, it's better to wait and watch, because clearly we really don't know what might come, on the tariff structure for the pharma basket. I think Mr. Trump has clearly said that it is a separate category, and that would be, taxed on a different tariff level. See, I think today there was overall panic in the pharma sector, because yesterday there was good news that pharma and IT were two sectors that were completely unaffected by tariffs. But today I think it's a different narrative. So my sense is that, Natco is a company which exports almost 75 to 80% of its revenues to the US market. So they are one of those companies which are heavily dependent on the US market. So if at all any tariff comes in, it's going to hurt them very badly. And that is going to obviously reduce their margins, reduce their competitive positioning in the market. And clearly, Natco has lost a case for a very important drug. And that is probably one of the reasons the stock has corrected sharply. So my sense is, it's better that the investor, exits his position here and gets into some other sector like consumption or banking, where I think, maybe at the same odd level, he can reinvest and possibly cover up his losses. Because once the pharma tariff is announced, I think you could see another round of sell-off. And that would definitely bring down, overall the pharma basket further, because now there is total panic and confusion, which I believe, is quite logical. So it's better to wait and watch for any fresh move. But here, I think you could look at buying maybe Varun Beverages, which is quoting at around 530, 535. Or you could even look at some good, PSU banking stocks like Bank of Baroda, or maybe a Canara Bank or a PNB, where I think, the risk reward is much better.
Right. Your analysis makes complete sense, Avinash, given the current volatile scenario in the pharmaceutical space. In fact, Sundar, I'd like to take this question to you as well and know because Avinash has already recommended to exit the stock, and since you're a technical expert, could you give us the correct levels for Mr. Sharma to exit, because he currently holds 300 shares at 1,200 rupees. How should he go about his exit strategy?
Talking about Natco Pharma over here. So Natco Pharma is currently into a very, very narrow range, and I would like the viewer to suggest a stop loss at 760 level. So if the stocks close below 760, then it's a good exit for me. And otherwise, I mean, the structure doesn't look positive to me at all. So better to book profit at 760 if the stop loss is taken out.
All right. Thanks for that view, Sundar. Now let's go across to a caller joining us from Mysuru. Hi, Ullas. Good evening.
Hi, ma'am. Good evening, ma'am.
Yes. How can we help you?
Ma'am, Motilal Oswal stock 500 quantity, average price 700 rupees. November month buy, ma'am. Short term 9 month, ma'am. Extra share buy, ma'am. Profit loss, ma'am.
Okay, because I can see that you are sitting on a loss of almost 52,000 there. So I just wanted to ask that when did you buy Motilal Oswal stocks?
700 rupees average price.
No. When did you buy it?
Ma'am, 500 quantity.
Okay, understood. Avinash, coming to you, since he's looking for a 9-month picture, which is pretty short term, but still, talking about the fundamentals of Motilal Oswal, it seems pretty promising. But still, what's your outlook? And since the stock has declined significantly from its 52-week high to the current levels, so what do you have to say?
See, I think we are constructive on the capital market intermediary space, specifically broking companies, asset management companies, wealth management companies, even the depositories. So I think, clearly one has to take a longer term view on the Motilal Oswal stock, because clearly when markets correct, you see a big sell-off wave in most of these capital market intermediary stocks. And I think one good part about Motilal Oswal is that it's an integrated broker. It has, apart from the broking activity, it's got a lot of fund-based activity, and it's one of the larger players in the broking, kind of arena. So my sense is that despite the fact that he's purchased the stock at a slightly higher level, if he can give in at least maybe a year or year and a half, once the market sentiment improves, see, I think after any correction, the market stabilizes, consolidates, and again, the economic activity continues to move upwards. So I think you need to take a longer term call here. The business is going to grow exponentially over the next, say, 2 to 3 years. But as of now, I think there could be a little bit pain, because volumes have shrunk considerably, after the new F&O rules have come in. But I think if the investor can hold for the next 12 to 15 months, he should stay invested. I think he should not exit the stock at these levels.
Right. Thanks for that view, Avinash. If Ullas, you're hearing to our experts, so it's not advisable really to exit the stock after 8 to 9 months, and instead you should hold the counter for at least 12 to 15 months. Now with that, let's go across to a caller from Patna. Hi, Nilay.
Good evening.
Good evening. How can we help you?
I'm having 12 shares of Hero MotoCorp at the rate of 4,700.
4,700?
Average price.
Okay.
Since it is going down, what should I do with this? Whether should I average it? I'm open to having a long-term plan in this.
Okay. And when did you buy it, Nilay?
I first bought one share at 6,200 when there was news for IPO of one of the subsidiaries.
Yeah. All right.
So then I got stuck up after that. I bought it at the lower price.
Right. Avinash, coming to you, talking about the auto space, after, firstly, everybody was very much, jittery about the space, especially after Trump alerting of tariffs in the auto space, and now he has actually imposed 25% tariffs, in the auto space. Now the investors are a bit, worried as to what they should do, since the counter is falling, very steadily. So what suggestion do you have for Nilay? Should he be holding Hero MotoCorp shares for long term, let's say 2 to 3 years, or should he be booking his losses there?
Yeah, I think, first of all, I think, Hero MotoCorp is a company which is largely focused on the domestic market. They are not large exporters of two-wheelers, and whatever they export is a very marginal quantity. So the import duty, surcharge of 25%, which Mr. Donald Trump has announced, is unlikely to actually make any significant dent to the profitability of the company. Our sense is that once the rural economy starts getting back into action, we have a good monsoon, and hopefully, I think interest rates start falling because we are very near to the RBI policy. Hopefully, if there's any rate cut, that could possibly propel some kind of demand, and plus the tax exemption which has been announced in the budget is also going to be a kind of a key driver for buyers for two-wheeler products. So coming back to Hero Motor, I would say that the investor can continue to hold. It's a solid kind of business. Company is virtually debt free, has a large cash kitty, generates a good amount of cash flow. I think you need to wait in for the next at least year and a half to ensure that the recovery happens. I think two-wheeler sector has taken off very well. In fact, now most of the players apart from Hero Motor have also started focusing on the electric vehicle market, where Hero Motor has got a very large market share. So I think that also is going to propel growth. So I think keep the faith and stay invested for the next 12 to 15 months. I think you could definitely see a good upside, going forward.
All right, keep faith and have patience, and Hero MotoCorp will yield some results there, is what Avinash is suggesting. With that, viewers, we'll have to slip into a short break. Keep sending in your queries on WhatsApp and we'll call in. We'll be right back for Ask Profit. Stay tuned to NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research. shines a light on the biggest stock market movers.
Hello and welcome viewers, you're watching Ask Profit on NDTV Profit, and we are joined by Avinash Gorakshakar on the fundamentals and Sundar Kevat on the technicals. So they are there, experts are there to answer all your stock related queries. So please just call in, and the numbers are flashing on your screens right now. With that, let's go across to a caller joining us from Andhra Pradesh. Hi Ramchandra, good evening.
Good evening, madam.
Yes, how can we help you on the show?
May I know the Ramky infrastructure, fundamentals and technical skills, madam? May I know?
Okay, and if you could just explain a bit further, how many stocks have you bought? How many shares have you bought? At what price?
Now, presently, last month I purchased 200 shares at the rate of 460 rupees.
Okay.
But 2021, I have purchased 10,000 shares at the rate of 180 rupees.
Okay.
And sold at the rate of 600 to 800 between.
All right.
Now, can I enter at this time, add my portfolio? Please guide me fundamentals and technicals of Ramky Infra, please.
Okay, okay. So, Sundar, you know, Ramky Infrastructure is currently trading at 445 and was down in trade today over 5%. So, what are the charts suggesting on this counter?
See, as of now, the chart is not positive. The stock is currently into a range from 480 to 445 odd levels. I wouldn't recommend to add the stock as of now, but yes, if the stock somehow breaks above 520, which is an important resistance to watch out over here. So I mean, 520 is a good level to add, but not at this level. And if the viewer wants to place a stop loss, then yes, the stop loss should be placed at around 425, because this is where the important support is, and from that level only buyers were interested in previous past few months. So I would suggest the viewer to not add as of now, but yes, if the stocks break out above 520, then yes, the viewer should add, but not at this level.
All right, so one should not be adding at these levels is what Sundar is suggesting. Avinash, talking about the infrastructure space, so are you firstly positive on this counter, and if you talk about the infra space in particular, how is it faring out?
So I think Ramky Infra is a very large dominant player which operates in the sewerage management and the EPC business and the construction business. They've got a lot of annuity projects which give them good regular kind of cash flows. I think the management has also been quite experienced in this business. So I think the best part is that the government is also now going to focus more on a lot of these infrastructure projects, specifically construction activity in almost all the states in the country, and that provides a good growth opportunity for a player like Ramky Infra. The best part is it's a domestic focused player. They don't have any large export exposure, very little exports. So I think the company is that way definitely insulated from the current tariff issue. So my sense is that around 450, 455. If the investor has got a reasonably long time, around 12 to 18 months, he could definitely start nibbling in this counter, because clearly the cash flows are good. The order book is almost 1,800 to 2,000 odd crores. So that gives a fair amount of visibility to this business. So I think it's a matter of time. Maybe the second half of FY26 should be a lot better. And that should obviously lead to a good amount of re-rating here.
All right, thanks for that view, Avinash. And, our experts are pretty positive on the counter. Let's go across to a caller joining us from Bengaluru. Hi, Anand. Good evening.
Good evening, NDTV team. Thank you so much, for answering my calls.
It's our pleasure. Please go ahead with the query.
See, I have Solar Industries 40 shares.
Okay.
Brought at the rate 3,650.
All right.
So just wanted to know, should I book some profit or should I hold? Because I had a lot of other stocks where I was sitting on 100% profit, but all of them have come into red now.
Yeah.
So a couple of them are in red. So this one and Bajaj Finance, I was sitting in almost 100 and 200% profit. So just wanted to know, should I hold these things, or should I book profit, or should I wait patiently, like
Okay,
that's
Anand. And when did you buy it?
This is almost during post-COVID, around
Post-COVID.
21, 22 in that.
All right, all right. So you are a long-term investor. Firstly, I'd like to congratulate you on spotting the correct levels, since you have made a significant profit there. Avinash, what's your suggestion to Anand? Should he be booking his profits, because he has made quite a significant amount of profit there? Or, should he stay patient with the counter to make more profits in the future?
No, I think clearly, this is a stock which has made multiple returns for the investor. But let me tell you, Solar Industries is a very dominant player of explosives. It's an Nagpur-based company. And the best reason why the stock has got re-rated is that it's like a quasi-monopoly in this business. There are not many players who are as large as Solar Industries. Plus, now they are also making ammunition shells, for the defense. So basically, the product basket for the company is quite promising. My sense is that one of their large customers is Coal India for the explosive product basket. And this demand is going to grow, on an annuity basis without any worry. So I think, this is one of those companies which has got nothing to worry on the tariff issue. I think business is going to grow. And as far as the economic growth is concerned, over the next, say, couple of years, you could see growth continuing to grow. So I think, if the investor requires a little bit of money, he could book out a little bit of money because he holds about just 40 shares here. So my sense is that one could look at multiple returns from this kind of company, provided, you can hold on. These kind of stocks will not get hammered that badly, and there's a very strong buyer at lower levels for such kind of companies. So I think it's better that he holds and gets the value going forward.
Right, Avinash, and also just out of curiosity, currently it's trading at 10,987. So for a new investor who wishes to invest in this company, are these the correct levels to enter?
Yeah, I think if you can allocate, let's say, on a SIP basis, because these are very large, expensive stocks. So, it's not advisable to put in all your money in one company. But I would say that, if you can add a few stocks on a monthly basis, over the next, say, 3 to 4 years, we could see further exponential returns, because the moat in the business is extremely attractive. There's hardly any competitor in the market close to Solar. And I think clearly they are sitting on a very healthy order book, and plus it's a fairly strong domestic play on the economy. So I think, one could definitely look at doing an SIP here, but keep a time horizon of at least next 2 to 3 years.
Understood. That's an interesting comment on Solar Industries, Avinash, I must say. And now we will go across to Ankit. He's calling us from Gujarat. Hi, Ankit. Good evening.
Good evening.
Please ask your question.
I am holding 6 shares of Tata Motors at an average price of 841. And I want to average out at current levels of 614. So shall I do it at current levels, or shall I wait for further correction?
Okay, understood. And when did you purchase these shares of Tata Motors?
Around 7-8 months ago.
Okay, understood. Got it. So Ankit, in just 7 to 8 months, has suffered a loss of close to 1.5 thousand, so 1,500 rupees. The stock is now trading around 613 and was down close to 6% in trade today. Avinash, I'd like to get your fundamental view on this one. Because Tata Motors is an interesting automobile company, and we were discussing about auto just a while back with Trump's tariffs affecting the space. Plus, Tata Motors is also bearing the brunt of the sell-off because of its UK-based Jaguar Land Rover having significant exposure to America. In fact, close to 23% of JLR's global sales came from America in FY24. On that front, Tata Motors has been down. Would you suggest, Ankit, to average shares of Tata Motors at this juncture?
See, I think clearly in the near term, there is going to be some pain for Tata Motors, because as you rightly mentioned, almost 22 to 23% of its global sales, come from the US market. And with the 25% duty imposed on, imported cars, this is definitely going to make these products a little more expensive for the customers there. and demand to that extent obviously would get impacted. But I think longer term, I would believe that the management of Tata Motors would definitely do some sort of rebalancing and would definitely take remedial measures. At 600 odd level, I think most of the risk is priced in the stock. But I would still suggest that he should actually buy slowly. He can buy maybe 50% of what he wants to buy and gradually wait for the markets to stabilize. Because in this volatile market, as things stand, we could see further corrections also happening here. So maybe 50% he can buy now, and the rest 50% he could wait for some more time, and definitely keep a time frame of at least 12 to 18 months.
Okay, so buy slowly is a suggestion that Avinash is giving you. And now we have Devraj. He's calling us from Bengaluru. Hi, Devraj. Good evening.
Hi, ma'am. Good evening, ma'am.
Please ask your question, Devraj. What's your query today?
Ma'am, KPI Green Energy 800 quantity, average price is 600 rupees.
Okay.
August month of 2024 buy, ma'am, 1.5 50,000 last, ma'am. Short term 12 month, ma'am.
Okay, understood. I'll take this question to you, Sundar. Devraj is now sitting on a massive loss of close to 1.5 lakh rupees. He bought these shares, 800 shares of KPI Green Energy at 600 rupees a piece in August of 2024, right around when markets in general started falling and we're currently in a bear market. How do you see KPI Green Energy traveling in the future, because the stock has been down, has seen significant cuts? What would you suggest Devraj to do?
The stock is currently trading into a sideways zone. The zone is from 450 to 400 range. Yes, and apart from this, if I see, so I would like to suggest the viewer that he should place a stop loss below 390, because that is where the important support level lies. So yeah, this is my view for this KPI Green.
All right, thanks for that view. With that, let's go across to a caller joining us from Gujarat. Hi, Shivam. Good evening.
Good evening, ma'am.
Yes, how can we help you on the show?
Thanks for taking my call.
Yes, it's a pleasure. Please go ahead with your query.
Okay, ma'am. I just bought today 1180 share of ONGC at the price of 227. But for this, I sell Bajaj Housing Finance and I book some loss. So I just want to know I did okay or how, and I am worried about the continuously crude oil particular prices dragging down. So what shall I do? Shall I average more or shall I swipe it again?
Yeah, Shiva. And firstly, I'd like to know whether you are a short-term investor or a long-term investor.
Mid to long-term. Actually, this particular counter also giving a good dividend, but I want to know about that. What shall I do more about ONGC now?
Yes.
And how about Bajaj Housing Finance? Shall I swipe it again or continue with that what I did today?
Okay. So, Mr. Avinash, coming to you, since 2nd of April, the stock has seen a very sharp decline, and it has been affected by the crude oil price fluctuations that are happening, So what sense do you make of ONGC for the long term? And Shivam, like he actually moved from one stock to the another. So is it the right move? And should he be, staying, invested in it for long term? Is it advisable for him to do that?
Yeah, I think in a scenario when crude oil prices are coming down, I think one must understand that the downstream players, like oil marketing companies, could get benefited significantly. ONGC is an upstream player, and just to tell you, see, ONGC subsidies are dependent on crude oil price. Whenever the crude oil price is correct, they lose a lot. Only when crude prices start rising, that is the time when ONGC benefits. So I think in this given scenario, I would say that oil marketing companies like IOC, HP, BP, looking at the kind of growth in the automotive domestic market and the aviation market, the throughput which has increased, that is definitely going to help them get a better gross refining margins in the coming quarters. Maybe not in the March quarter, but at least in the April to June quarter, if crude prices remain soft. My sense is that you would see a lot of bounce back in the companies which actually do the oil marketing business. So clearly ONGC could take a little bit time, because if crude prices remain soft, and obviously with OPEC increasing supplies now, that would put a little more pressure on the crude oil price front. So ONGC would be a slightly more longer term bet and would take a slightly longer time frame to recover compared to the oil marketing companies. And the viewer also had a question on Bajaj Housing. See, I think clearly if the investor is a long term investor, one should remember that Bajaj Housing is a secular growth story. It's been funded by the Bajaj Group, which has given a lot of wealth creation to shareholders. So I think you need to keep the faith in this group and we remain invested at least for the next 1 to 2 years. Bajaj Finance has been one of the best wealth creators. Bajaj Housing can also repeat the same trajectory provided that the investor can stay invested for the long term. So I think, don't make a hurry of getting out of the stock just because it is not performing. Better days can come over the next couple of years.
Right. So stay patient with ONGC and Bajaj Housing is what Avinash is suggesting. Avinash, I'd also like to ask, since you said that, ONGC might take a bit long to, to bounce back. But can this also be an opportunity since it's trading at, near its low? So is this an opportunity for an investor to actually accumulate more?
No, I think it all depends on the time frame, because currently, if you're looking at the next 12 to 18 months, I don't think you're going to see a very big upside here because my sense is that unless crude prices bounce up to 75, 80 or maybe a $90 per barrel a piece, there could not be a very major increase in the stock price for ONGC. As far as the oil marketing companies are concerned, these are, very clear bets because once oil prices come down, you're going to see immediate benefit to them in the gross refining margin number. So I think, ONGC can be for those investors who want to take a 2 to 3 year kind of call. Obviously, these prices are attractive, but the risk reward could come in over a slightly longer time frame.
Okay, understood. And now we will talk to Parth. He's calling us from Hyderabad. Hi, Parth. Good evening.
Hi, good evening. Thank you for picking the call.
My
question is regarding GAIL. Actually, I've got 300 shares at an average price of 180.
Okay.
At this price, I have a long-term vision. I can hold it for more than 3 years also. Is it a right price and right time to invest more?
Understood. And since when did you exactly purchase these 300 shares?
I think I have purchased in 3 lots actually in last 6-8 months. I exactly don't recollect, but 300 shares in last 6 months I have purchased.
Okay. And how long do you want to hold them for?
More than 3 years.
More than 3 years. Okay, understood.
Yep.
So what would you exactly want to know from our experts today?
Is it a right price to accumulate more?
Accumulate
because it has corrected a lot from 250 to 180.
Right. Okay, got it. Sundar, I would want to know your view on GAIL. Parth currently holds 300 shares at 180 rupees a piece, and as he rightly mentioned that the stock has seen extreme corrections. From 250 levels, it is now trading around 177. It in fact was down close to 3.8% in trade today as well. Do you think it's trading at a discounted price and therefore should Parth accumulate more shares of GAIL at the moment?
Yeah, the stock look positive on chart. If I talk about the structure, if I talk about the structure, so it is a classical uptrend wala structure. It is creating higher highs and higher low formation. A breakout above 182 would ignite the stock till 215. So I would recommend the viewer to add the stock above 182. And if the viewer wants to place the stop loss, then yes, he can place the stop loss at around 165, where the midterm 50 DMA is placed out. So yes, it is a good buy for me as of now.
All right. Thanks for that view. Let's go across to a caller joining us from Delhi. Hi, Samay. Good evening.
Hi, good evening.
Yes.
I have a query about Kochi Shipyard.
Okay.
I bought it at around 2,300 last year sometime, and the stock is now, trading at around 1,300. And I have a long-term horizon of about 8 to 10 years. So we just wanted to know about, what are the future prospects of this stock.
All right. So that's a pretty long, horizon. So Cochin Shipyard actually outperformed the Sensex with a gain of over 10%. And historically, it has demonstrated strong long-term growth, outpacing peers in the shipbuilding sector with a surge of over 4%. Despite this, its short-term performance has been a little volatile. So Avinash, what sense do you make of this counter?
No, I think if the investor has a long-term view, then I think he can definitely chip in at the current level. See, I think the biggest benefit for defense companies is that the government has become again aggressive in awarding orders to most of the local defense companies, and the Make in India manufacturing program, which has been initiated by the government, is going to see further acceleration over the next 3 to 5 years. Defense is a space where government wants to encourage local production, and Cochin Shipyard in particular already has an order book of close to 4,000 crores. So, the visibility for the next couple of years is quite solid. It's assured. And more importantly, I think this is a business which is going to grow by leaps and bounds. The marine sector, defense sector is one sector where the government has aggressively announced big growth plans. So I think, if the investor can hold on for the next, say, 2.5 years, I think definitely the stock can bounce quite well. But I think you need to give a long time frame to, reap these rewards.
Okay, got it. So long time needs to be given to Cochin Shipyard to reap your rewards. Now we have Tejpal. He's calling us from Hyderabad as well. Hi Tejpal, good evening.
Hi, good evening. I wish our panel, the TV and the audience advance happy Sri Ramanavami. May God bless with all the prosperity and happiness to us.
Thank you so much. I extend the same wishes to you as well. Please ask your question.
Yeah, I'm holding 50,000 shares of Allcargo Logistics at an average price of 29 rupees.
Okay.
At the average price of 37 rupees, my bad.
37.
So, 37, yes. I'm sitting on a loss of 4 lakhs. I'm wondering at what time should be adding another 50,000 shares? Is this company good enough to add another 50,000 shares?
So 50,000 shares. Why are you so hell-bent on investing in Allcargo Logistics? I just want to understand your rationale.
Yes. Let me explain. So compared to the peers, the Blue Dart Logistics and Delivery, I feel that this company is very undervalued, and their subsidiary, HCF Worldwide, that itself is worth a lot more than the current market capital. And if you compare to the price to sales or market capital sales or the PEP, in all the aspects, I think the company is outstanding. And recently, they have done all the restructuring. If you see, they are delisted many companies and newly listed their subsidiaries.
Right.
And their subsidiary, Worldwide Cargo something, if they're gonna demerge and list that company, I heard that it will cause a lot of value unlocking. I'm not sure if I'm wrong or right.
Okay. So let me just summarize your question. Okay, you hold 5,000 shares of Allcargo Logistics at 37 rupees a piece. You want to know whether or not you can start accumulating 50. No, wait. So you want to accumulate 50,000 shares, right? You want to add 50,000 shares.
50,000.
Correct. And currently you hold 5,000.
No, 50,000.
50,000. Okay. So what would you want to know from our experts today?
At what price should I be adding more? Another 50,000. What are the?
Okay, got it. At what price should you add more 50,000 shares of Allcargo Logistics? A very interesting question, I'd say. Avinash, I'll take this one to you. Tejpal has given us a background of his investment. He's told us the reasons why he has entered this stock. But again, he's sitting on a massive loss, around 4 lakh rupees. That's a huge number. And just my straightforward question to you would be, number one, do you think these are the right levels to accumulate more 50,000 shares? And Tejpal would then end up making over 1 lakh shares in his portfolio of one company. So is that a healthy investment move? And second, when do you think Tejpal will be able to make profits? Because the stock has been seeing correction from a long time now.
So I think, frankly, looking at the loss and the quantity he currently holds, my suggestion is that it's better to wait for the March quarter numbers. We are very close to the March quarter numbers. Once we get some sort of visibility, see, the company has been in the logistic business for a very long time. They've been operating in the global markets, and they are very large logistic players. So there's no doubt that the business, dominance is there. But I think the markets clearly want to see better clarity on the earnings and on the operational revenue numbers. So my sense is that if at all he wants to buy and he takes a decision to take a fresh call, it's better to wait for the March quarter number to come out. Let the management commentary come in, because this is a large player. And as you rightly mentioned, there's some restructuring. There are 3-4 companies which have got listed separately. So basically, I don't know whether the investor has got allotment of those shares. The total fair value of the investment has to be considered by adding all the 4 companies totally. But coming to Allcargo Logistics, I think it's better to wait for a couple of quarters. Maybe the March quarter is going to now, numbers are going to be announced by the 2nd or 3rd week of April. After that, it would be a wise decision. And I think anything, say around 25 or below that, would be a good entry point, if the investor has a time frame of at least 2 years. So, this is not a company where you could see quarter on quarter a big jump. But yes, over the next 2 years, if things improve, the global trade market improves, because now global trade is going to be completely disrupted because of all these tariffs. So I think we'll have to be very, very careful in looking at how the company moves forward.
Right. Thanks for that view, Avinash. Let's quickly go across to a caller joining us from Hyderabad. Hi, Narendra. Good evening.
Yeah, good evening.
Yes. How can we help you?
Quick question.
Yeah.
I have a quick question on the.
Yes, please go ahead.
Yeah, on the idea of Vodafone.
Okay.
So I sold a 6,100 shares at the average price of 12 rupees 51 paisa.
Yes.
And my question is like, what is the timeline for the profit margin, and shall I add few more shares to my current portfolio to make it average
And
out?
are you looking for a long-term view?
Yes.
Okay.
I'm looking for the long, down the line, 1 or 2 years.
Understood. Avinash, quickly I'd come to you. Since government has increased its stake in Vodafone Idea, and it's certainly a positive for the company, and it has actually intrigued a lot of investors there. So what suggestion do you have for Narendra for the long term on this counter, because he bought it at elevated levels of 12 rupees and currently the stock is trading at around 7 rupees. So what suggestion do you have there?
See, unfortunately, Vodafone is the weakest player in the telecom market after Bharti and Reliance Jio. See, my sense is that, for this company to recover is going to take a long time. This spectrum write-back which has happened, the government has actually exchanged the spectrum dues by infusing more equity, is just going to give temporary relief to the company. Every quarter, this company makes a loss of roughly about 3,000 odd crores. So I think, around 10 rupees if the stock goes up, I think the investor should make a wise decision of getting out, because there are many interesting companies in the broader market which could possibly give a better risk reward, and the loss which the investor is incurring is pretty large. So my sense is, I think wait for 9 or 10 rupees and exit the stock and get into something better which can actually add more value to your capital.
Okay, and thank you so much for that view on Vodafone Idea. And Avinash and Sundar, I'd like to thank you both again for joining us today and answering all the queries of our viewers with patience and prudence. Thank you so much. And viewers, in a global uncertainty, in a time like now, experts suggest you to tread carefully, stay invested, but be careful and be patient. With that, we will take your leave, but do stay tuned to NDTV Profit, as there's a lot more lined up for you on the other side.
He sold most of his stock, 80%, as on